200 target subscribers, guys. This is a massive achievement for me, because one of the main purpose of this channel is to just let you know, teach you guys what I know, okay, and also educate you guys, guide you guys solely based on my strategy, or based on what I know in this market. So hitting this one, I want to use this Friday to make this video and congratulate you guys, and also for you to get some knowledge from this. So without wasting any time, let's now dive into what I want to show you today. So today I want to show you guys three types of market structure that we have, and how I have been You see, anytime I post my signal, if the trade reacts from it, it will straight go to TP. If trade reacts from it, it will get 50 pips before it reverse, maybe to hit stop loss or to take us on break evening. It's all based on three things, which is the market structure. So I will name it MSS. And you have three types of market structure. So three types of market structure. So the first one that you are going to learn is the swing structure. Can you see the drawing? So if you see any type of action like this, any type of pattern on your chart like this, just know that we are now a swing structure. You are trying to identify a swing structure irrespective of the time frame. So how do you identify a valid swing structure? Before you can identify a valid swing structure, you must make sure that market has given you either a liquidity grab here or a break of structure. So either you see a liquidity grab or a break of structure. If you do not see any of this kind, guys, you are not going to call this as your A plus setup or a swing structure, right? So first of all, you want to see market giving you a break of structure down here, or maybe sweep this liquidity before you see a change of character. So before you see a change of character here, so it means that if I want to trade now and I want to look out for any pattern or any direction of the market, I need to see a swing structure, and a swing structure is used to determine the overall direction of the market. It is used to determine the overall direction of the market. So anytime you want to trade, this is what you are always going to look up for. You want to see market taking off the previous low, or maybe sweeping the liquidity before giving you a change of character. So this has become your swing structure. So now the retracement, the pullback that you'll be expecting is what we are going to term as the substructure. So any retracement that will be coming like this will be internal structure, right? Is what we are going to call as our substructure. So people call it this one, it is the retracement, the pullback. Are you getting it? But I call it the substructure, or the structure, and this is your swing structure. Are you getting it, guys? So we have our swing structure and our substructure. After identifying this, the one now you are waiting for another impulsive movement again, and that impulsive movement that you're expecting is what we are calling again the minor structure, and that one is always used to continue the trend. So the minor structure. So this one is used to identify the overall trend of the market. The substructure is used to identify the pullback, the retracement of the market, and this one is used to determine the continuation of the trend. So this is all that you need to be profitable, all that you need to be not to be profitable, but this is all that you need to master your chart. So now, after knowing the swing structure, the substructure, and the minor structure, you ask me what is next. Now, how do you know this substructure is about to end over here? How do you know that if the market is pulling back, it will stop here and continue going up? That is why some of you can see a nice setup around this area to take, but you are afraid, you don't know that the market will continue going down, or it will continue pushing higher. So that is exactly why you are watching this video. So now let's assume you're able to identify your swing structure, right? So, and I said that before you can identify your swing structure, you want to see something like this swing structure. So a change of character, either a break of structure or a liquidity gap over here. So anytime you identify this on your chart, you need to use the Fibonacci tool, guys. This is one of the powerful tools that you can never neglect or as a tool in your trading analysis, and you need it every day, every night, either it is raining or it is shining, guys. So when I use my fib from the bottom or the swing low to the swing high over here, you see this line over here is determining the 50% equilibrium of all this movement. So this is the movement, this is the line that has divided this movement into two equal parts. So you need this Fibonacci to be able to trace where the market is likely to reverse from. And one advantage of using Fibonacci is what? It will give you your support area where people are trying to enter the market, what actually the market is trying to do. Fibonacci is everything to me, guys. So this is what you need. Now, all after plotting this, you are just expecting the market to start for giving you what internal change of character respecting. So the moment market tap into this what level or this zone, all you should be doing is what to stop any kind of what selling. That is why you need to start looking for what a buying position, a buying opportunity. So from this level, you'll be starting looking for buying opportunities. Sometimes market can pull down and come and test called the deep pullback. You have for three type of Fibonacci: the mid pullback, the surface pullback, mid pullback, and deep pullback. That's exactly what I'll be teaching you guys when you join the boot camp. So you are expecting market to come and retrace the 50% equilibrium. So this is where you start looking for what your buying opportunity and what you continue riding with the trend. So now let's not waste time on this concept. If you want to know more about this, guys, all you need to do is what don't hesitate to join the boot camp. Try as much as possible to be part of that boot camp, because I'm going to reveal a lot of what gems. You know how we'll be doing it, guys. So after identifying this retracement level, you expect the market to continue giving you the continuation trend following the swing structure. So today, let's look at gold. So on gold, when you look at gold on the 30-minute time frame, guys, look at gold on 30-minute time frame. So we are now going to identify anytime you want to analyze trade, make sure you identify your swing structure, your substructure, and your minor structure. If you have that in mind, it gives you some kind of levels, some kind of leverage already in the market. That's what your trade will always play right. That's why sometimes if I mark my zone even 1 hour ago, 3 hours ago, if price tap into that zone, it will surely give you 20 to 50 pips before it goes to the south direction, guys. So now looking at the 30-minute time frame over here, what can you see, guys? You realize that for this market has been pushing higher, pushing down, pushing higher, pushing down. So what it is your role? Your role is to analyze the market, identify the structure, which I call the language of the market. So now when you look at this now, you realize that for this market has given us a swing structure at the top level over here. This is what caused the market to give us this bearish movement. So we see a break of structure above over here. So I have my break of structure above over here. And what can you see again? Market clear the low that created that high. So we see a change of character. You see a change of character at this level. So we have our swing structure already forming, guys. So already nobody will tell you that when you have your swing structure. So all you need to do now is to focus on selling. Are you getting it? When the price was doing something like that, you know that, oh, market is giving you a swing structure. Look at it. So market give you something like this, pull back, now swing structure. This is it. Hmm? Swing structure. So sweep liquidity, break or change of character. This is your swing structure, right? So that's exactly what this market is trying to do at this level. So already you have identified your swing structure. So what are you trying to do? You continue analyzing the market. This has given us another change of a break of structure to the downward side. So this market, after the swing structure developed, it continued breaking low to the downward side, and this is the recent low that this market has created. So you have your swing high and your swing low, and this is exactly your swing structure that you are talking about. So anything that you'll be doing at this moment when this market was forming, it will look for a selling opportunity at the right point. So now what is the next tool that we are going to use? We are going to apply our Fibonacci tool. You know, Fibonacci has two major parts. let's talk about that one too. After the three major parts, we also have what the two major part. That's the 50% equilibrium. Is the one that divide the whole market into two equal parts. So which we know as for the premium and the discount. So you know what? If you're in a bearish movement, we are in a bearish mode. The downside here, it is called the discount level, and the top of the Fibonacci or the 50% equilibrium is called our premium hot level. So it means that what over here you are only looking for what selling opportunity, and over here you are looking for what only buying opportunity. But now we are trying to follow the trend. So what is the trend telling us? The trend is telling us what the market is what bearish from the 30-minute time frame when the market was here. So we are only looking for what a selling opportunity. So now, so that's another strategy that you need to what also apply to it, where you need to be selling from in this market and where you need not to be selling from this market. And yesterday, you remember we caught some sell over here like this, 180 pips. This is a sell. This is the level that you got the sell. Yeah, you see it? Yes, there's a level that what you need to be able to apply some kind of strategy to this chart before you can get those lesser level over there. So that's exactly why you need not to miss my boot camp, guys. So with that again, let's go and let me explain something again. So now you've identified your swing structure and your hot main structure. So later on, what happened again? You realize that what markets has taken off the low or the high that created this low. So this is the high over here that created what this lower low over here. So what can we see? We realize that what market has given us another hot change of character, which has indicated that what the market is about to go to bearish mode. So after this hot change of character, and this is the hot lower low, now change of character, this market continue hot, giving us a bullish hot wave. So what do we see over here again? A change of character, and after this change of character, market continue to break what a structure to the hot upward side over here. And look at it, this another hot break of structure to the hot upward side, guys. And let's look at this again, another break of structure. So it means that what after every change of character, market continue to break a structure above, which is a very nice indication that what the trend is valid. So after this change of character, a break of structure and another break of structure. So what is your swing structure again? So always you need to follow the rules. You need to follow the pattern. That's what. Anytime you want to have a swing structure, you need to see something like this. So can you see something like this? Yes. Let's look at it. So look at this over here. This is your hot low, and this is your another low, and this is your hot, your swing structure. Guys, look at it. This is your swing structure. So even within another structure, you have another structure. So structure can be developed inside a structure. Guys, a structure can also be developed inside what? A structure. And you know, a structure is always good to be spotted out on the hot and the minor pullback or the minor structure inside. So when you look at this another swing structure. It means that from this to this is your hot swing structure. So swing low and the hot, your swing high. So it means that what? This is our swing high, swing low and a swing high. So it means what? You need to also make use of what? The Fibonacci again to see where you need to be selling and where you need to be buying from. So when you take another fib from this low up to this high, what can you see? You can see that for this part of the Fibonacci is called, we are terming as called discount, and this part is called the premium. So we are going to be looking for selling opposite position at this level and looking for buying position at this level. So now the overall bias of the trend, you must also consider that one. And what is your direction for the day? So are you going to be looking for buy, or you're going to be looking for sell? And you know, gold, when it comes to trading gold, you need to consider some factors such as geopolitical event, those news. You need to consider all that is going around what the market. So over here, it means what anytime market tap into this level, I'll be looking for buying opportunity. And at this level, because I don't want to trade against the trend, I will leave any sell opportunity over here. Just be looking for what a buying opportunity over here. So that one, it even reduce your trading time so that you will not be there looking for what daily setup. So guys, this is exactly what you need to know about what the structure of the market. And if you're able to master this, you see that you will just be focusing on a particular direction that you'll be buying and be selling gold. And it will take you up to some level for you to be analyzing for the both buy and sell. Even though you know the trend is bearish, you can be looking for buy and sell opposition. So this is exactly what I'll be teaching you when you join the what master class or the boot camp class. So if you don't want to miss any of my updates, do all your possible best to join this master class. And if you have any question too, don't forget to send me a DM, okay? And let's go.